somebody had asked, what is better, FHA or conventional? We didn't have the time to talk about it too much. So you did mention that it depends on several different factors, but I'm assuming it depends on interest rate somehow, or whatever is going on in the market based on whatever house you're trying to buy or whatever your situation is. So can you kind of like explain why somebody would want to go with an FHA loan over a conventional, vice versa?
Okay.
For a first-time home buyer, especially, more importantly.
Okay. Why would someone go with conventional versus FHA? Well, there's many different reasons why. And depending on, unless we're going to speak from a primary residence perspective, right? Not investment property, because FHA, you can't do investment property. You could do owner-occupied multifamilies.
Okay.
But FHA is predominantly geared towards low credit scores. That's why it's really was put in the marketplace. And that's why a lot of people talk about FHA is because of low credit scores.
Okay.
You can go down. Technically, FHA, what people don't even realize, FHA minimum score is like 500.
It's not a 580?
But lenders have what's called overlays, which they'll say, okay, we want 580 minimum. There's some lenders out there that might do 560, but you got to put 10% down or more, right?
Okay.
And have lower debt to income ratio. But most lenders in general will be at like a 580 credit score.
Okay.
You know what I'm saying? Conventional 620. So from a credit score perspective, you can potentially get approved for FHA mortgage with a lower credit score. And interest rate wise, if you are in that lower bucket, it won't be as bad as you think it would be, right?
Right.
Because the program is designed to help borrowers who have low credit scores, low down payments.
Okay.
Now, with conventional, if you have a 620, 640, 660, you might get, let's just say if the market rate today is 6.5% for a conventional mortgage. If you have a lower credit score, you're probably going to get a rate like in the sevens right now for a conventional on a 30-year mortgage, like 7.5%. Because conventional will penalize you more because you have that lower credit score. Whereas if you have a 620 with FHA, and let's just say the going rate for FHA is 6% today, for example.
Right.
You might get a 6.5 or 6.6. So you won't be a point and a half higher with FHA with a low credit score. Now also with conventional versus FHA, when you buy multifamilies, that's really where you see the big difference. With multifamilies, with FHA, you can put down 3.5% across the board.
For every single property that you're...
4-family, 3-family, 2-family, 1-family, condo, minimum is 3.5%.
Okay.
With a conventional mortgage, single family you can put down as low as 3% if you qualify for one of those specialty programs that they have for first-time home buyers, or as low as 5%. But when you go to multifamilies, even if it's owner-occupied, that's when you're going to see a larger down payment requirement. It could be 15% to 20% down payment. Right? And then to use the rental income to help you qualify with a conventional loan, if you don't have landlord experience, for the most part, you can't use that rental income to help you qualify. With FHA, you can.
So how do they check for like landlord experience? They have to see if you have
On your
actually already
taxes.
have properties. Yeah. So that's with the conventional. So FHA, you don't even have to worry about that. Like they don't even look at your portfolio, so to speak.
It doesn't matter.
Okay.
It's the program. The program is designed that way.
Right.
So it'll be more advantageous for someone who's buying a multifamily that may not have the down payment to go conventional to go FHA. But if someone is buying a single family, and let's just say they have a 700 credit score,
okay,
but they still only want to put down 5%, they'll probably be better going with conventional in that matter because the PMI factor. See, FHA has, their PMI is called MIP, Mortgage Insurance Premium. And when you do an FHA loan, remember, if you put down less than 10%, that PMI is for the life of the loan.
Okay.
With conventional, if you put down 5%, that PMI is until you get 20% equity in the house. And then at that time, you can request for your PMI to be removed. You know what I'm saying?
Okay.
So the PMI factor, you're not married to your PMI for the life of your loan with a conventional mortgage. With an FHA mortgage, you're married to that loan with the PMI. The only way out of it is to refinance out of that FHA loan to get rid of your PMI. With conventional, you can refinance as well to if the rates are advantageous
Yeah.
for you to remove the PMI. But if you don't, let's just say market never goes down, and if you build equity, you paying down your balance, things like that, you get 20% equity in there, you can call to have it requested to be removed.
Right.
So from that standpoint, like again, if you got a 700 or higher credit score, you got the 5% down payment, your debt to income ratio is low, it might be more advantageous for you to go conventional than it would be FHA. So again, it just really depends on the person and their profile. So like people always ask that question, what's better, FHA or conventional? I don't know,
Yeah.
because it's on you.
Right.
What's better, the better tool to help you achieve this goal of buying said property?